My name's Andrew Stotz of A. Stotz Investment Research, and I want to talk to you about what questions to expect in a case competition. This is part 1 of 6, and in it, I'm going to talk to you about what you might get asked about revenue. So, my life as a judge. I've been a judge for many years in various different case competitions, from CFA Research Challenge to the SCG Bangkok Business Challenge at Sasson. And I can tell you also that I've had 1,000 hours of presenting as a sell-side analyst to fund managers. And I'll tell you some stories about that in a bit. Now, the last thing I'll tell you is that I'm always presenting, and you are too. It's a matter of whether you're focused on the presentation that you're giving, and in particular on the judges that you are talking to. And think of it this way. You're always giving a presentation. Think about your mom and dad, your boss, the people that you talk to. You're always presenting your ideas, and they don't like it sometimes, and they don't want you to do it, or they don't want to do something, and you've got to present your case. So we are always presenting. Now, I'm going to review the questions that you may be asked. First of all, I want to tell you that I would say expect 80% of questions to be about your forecast and the remaining 20% about your valuation. This is what I also teach my students in the Valuation Masterclass, where I try to get them focused on getting the forecast right. And judges want to understand the story of your presentation. And that's part of the reason why that 80% is so important, because the revenue story, the profit growth is the story. So here's 6 common areas to expect questions on: revenue growth, gross profit growth or margin and growth, net profit margin, asset growth and financing, valuation, and share price and market perception. Of course, if you're presenting a startup company, you don't have to worry about share price and market perception, but we could probably replace that with exit. What's your exit plan? So here's the questions about revenue. What are your key assumptions about the revenue drivers of this company? What's driving the revenue? You need to tell the story. So, next one. In what way do your revenue growth assumptions differ from the past? So I'm going to tell you a story about this, and that is I have a coffee business. In fact, Coffee Works, and this is a B2B coffee roasting company in Thailand. And what I can tell you is that there was a time where we expanded into a new channel about 10 years ago, which was supplying hotels. When we moved into that channel, what was the impact on revenue? Whoa! It was a one-time increase in revenue in the year that we started it, and then it caused us to have higher and higher revenue growth over time. This is the story of the way that our revenue changed at that moment in time. You need to be able to explain something like that. Now, how are your revenue growth assumptions different from consensus? If you're an analyst like I was on the sell side, going to the fund manager, this is critical. The fund manager already knows everything that's out in the market. They see all the reports, and all of that is reflected in the price. So the only thing that the fund manager really wants to know, or any investor or any judge really wants to know, is what is different. Highlight to me what you know that the market does not know. Now, to reach your revenue growth assumptions, do you expect management to make significant changes from their prior style? Now, I want to tell you a story about a company. I really liked it. It was a mid-cap company, and I thought it was very well run, but it was fluctuating a lot, the revenue, because of the industry that it was in. And the management told me that they're making these changes that will make those fluctuations reduce over time. And they had to make some significant management changes to do that. As an analyst, I got behind that story. I thought it was a great story. I thought it was really going to drive, it was going to reduce the risk of the revenue and the profit stream, and that would increase the value of the company. But I missed something. What did I miss? The management never changed their behavior. They did the same thing that they did in the past. So if you're looking at a company that's grown organically, it's hard to argue that they're going to grow through M&A. If you look at a company that's been growing through M&A, it's hard to argue that it's going to switch to organic. So think about what the management style is. And then, of course, if management changes, then you may have a completely new style. What level of confidence do you have in your revenue growth assumption? Oh, I go back to 1995, New York City. I was visiting a hedge fund. I came out of Thailand to present my research about a particular stock. There was 4 hedge fund managers sitting at a table, and they fired questions at me. I'll never forget this meeting. It was so hard. But one trick I learned from that was the harder and the louder that they got, the softer and the slower I got at responding. I took their questions one by one, slowed down the pace of the discussion, and focused in on really answering their question. That's a very opposite way that I've done it in the past, where someone brings high energy, frustration, anger, whatever to me, and then I just bring it right back to them. That doesn't work. So that at the end of that meeting, I left just about to walk out the door, and the 4 people came up to me and said, "Hey, sorry we hit you so hard with those questions." I was like, "Yeah, it was pretty hard." And they said, "The reason why we did it is we wanted to see how confident you are in your assumptions." So the next one is, what are the strongest opposing views that could prove your revenue forecasts wrong? You want to win an argument? Start with the core arguments of your opponent. What are the opposing views? Understand those so well. What's your assessment of the competitive environment of the company's market? Now, in the Valuation Masterclass, I teach my students that they should be focused on Porter 5 forces. It's the best structure. SWOT analysis to me is a little bit more of a brainstorming rather than a comprehensive study of an industry. Another question, what are your assumptions about the company's market share? I can tell you, as one of my investments, CoffeeWorks, we're always asking, hey, why was our market share flat? What are we doing to increase our market share? What is it that's causing our market share to rise? These are very important questions for the management of the company. And what are the company's constraints to growth? All right, stop. I'm going to tell you a story about CoffeeWorks. When the farmers grow coffee and they harvest it, all the good coffee is ready right then. So as a company, when you go to buy the coffee, you can't say to the farmer, hey, I'll buy all of your crop, but I'll pay you 1 month by 1 month, but I'll take possession of it into my factory. No, what they say is, give me all the money and you can buy the whole crop. That's enough coffee to last us for a year. And therefore, in the beginning of our business, we would have to buy maybe 6 months, 9 months supply of coffee, put it on the floor of our factory. Oh my God, that was a huge constraint to growth. Why? Because it tied up all of our working capital, all of our cash in inventory. Eventually, what we started to do is work with brokers and other suppliers and farmers to try to push that off of our factory floor. Now, we still have more than I want on the factory floor, but that constraint is reducing. That is an example of constraint to growth. But it could be, we can't hire more salespeople. We don't have the budget for marketing. Whatever those constraints to growth are, make sure you know them. Are there risk reduction benefits from expanding into new products and markets? In my coffee business, we started with the office coffee service. Later, we added in supplying restaurants and coffee shops. Very different markets. Very, very different behavior of the 2 revenue streams. And then later, we added in hotel supply, where we supply coffee to hotels. That's based upon tourism. The other ones aren't. So those different characteristics of those different product lines brought our total revenue together to actually reduce the volatility of that. So think about how we can reduce risks through new products, new markets, new regions, new areas. All right, that's it for revenue. Now I'm just going to give you my tips. The first one is tell a story. Did you hear me tell stories in this thing? Of course, because I know that we remember stories. Focus on and repeat your 3 points over and over and over again. Talk to the judges as if they were potential investors. And in fact, sometimes you may say exactly that. So, can I count you in for $10 million now? What questions would I have to overcome to get you to commit to that money today? Think of them as judges and as investors. And when those judges really push you really hard, you say, you're the kind of investor I want investing in my company because you are challenging me. And the benefit of that is that we're going to build a much more successful company. Are you ready to write a check? Or are we just talking here? Boom. Now, view the Q&A session as your chance to help the judges better understand. And goodness, have fun. You worked so hard to get to this point. You've got the meeting. You're in front of them. They want to invest in people that they like. They don't want to invest in defensive people who are struggling with them about questions. They want to say, oh, that was an excellent question. Here's some thoughts about how I would respond to that question. Here's number 1, number 2, number 3. Enjoy the Q&A session. And also be prepared for the most important question you will be asked. You know what it is? Oh, it's the one that you don't know the answer to. You're going to be asked that. Are you ready for it? Get ready for it. Here's how I would get ready for it. Whoa, that's an interesting question that nobody's ever asked me and I haven't thought about. Here's my preliminary thoughts on whether that would be positive or negative. But I'm going to tell you, I'm going to do more work on that particular point. So, to review what we've talked about the revenue part of the 6 common areas to expect questions. Look out for the remaining parts of this presentation where I'll talk about gross profit margin, net margin, asset growth and financing, valuation, share price, and market perception. That's everything I know about responding to questions that you will get asked when you present to investors or at a case competition. Good luck.